Well, good morning, everybody, and welcome. My name is Tyler Yell, and today we're going to be talking about trading with the Speculative Sentiment Index. And we're also going to show you how to access this on the Trading Station 2 platform. We're going to be walking through not only the logic of trading with sentiment, but specifically how to use the Speculative Sentiment Index, which is very unique to the Forex market as a whole. So what I would encourage you to do is ask questions. I can tell you, this is a indicator, quite simply, that over time I have become more fond of, and the reason why basically is seeing how it works through different trades, and also just getting a feel for other indicators that I was looking at and how using sentiment basically made those signals from those indicators more powerful, at least in my opinion. So it's something over time that I've built a greater and greater appreciation for. So if this is your first understanding or introduction to the Speculative Sentiment Index, welcome. Thrilled you're here. And if this is something that you've been looking at for a while but interested in getting it on your charts live, absolutely understand. And if you have questions, you're still working through it, feel free to ask. I do need to go through a few bits of housekeeping here before we get underway. So first, just a few disclaimers. First, the margin warning, or the leverage warning, which says trading on margin can result in losses that may exceed your deposited funds. Please ensure you fully understand the risks and seek investment advice if necessary. The next slide states that past performance is not indicative of future results. I'll leave that open for a few seconds. We've had a few questions so far, and again, if you're just now joining, absolutely encourage questions live. I'm going to go ahead and switch to the next slide so we can get the housekeeping out of the way. But in terms of the indicator in its current presentable format, it's available on Trading Station 2 for those of you asking about using it on MT4. What we're doing basically is getting a good sample of the live product on TS2 or Trading Station 2 before it is presented live on another platform. So development, absolutely, but not presentable yet in terms of on MT4. So this says hypothetical performance results may have inherent limitations, some of which described below as you've read that. Let's go ahead and go to what we're going to be covering today. What are the big ideas? Yes, George, thank you for asking. George, great question. George says, is Trading Station 2 the same thing as Marketscope 2.0? Yes, yeah. Sorry about that. Marketscope 2.0, at least in my mind, is the charting package of Trading Station 2. Thank you, George. Appreciate that. So the big ideas what we're going to be talking about today, guys, is what is the Speculative Sentiment Index. We're going to be covering what SSI could mean to your trading. And again, this is something that over the years I've become more fond of. I've been more impressed with SSI the longer I've been around, which at FXCM about 8.5 years. And SSI has been around, to my knowledge, since before then. And then beyond that, you can see here, we're going to be talking about combining SSI with your current trading and how to get this free indicator on your charts. We're going to be pulling up live charts as well. So let me just kind of show you guys what we're going to be looking at today. This is the German DAX. This down here is what we'll be explaining in detail. And if you see basically a tab up front, it's a market that we have chartable data on for SSI. So we have SSI available for multiple markets. However, what's important to see here is that these are basically the markets where we have the ability to plant SSI on the live chart. So we'll be going back and forth between live charts and these slides. The thing that I would encourage you to constantly asking yourself is, and I'm sure you are already, but if not, definitely encourage, is basically to ask yourself, okay, so what does this mean to me? And before we get into too much detail, one of the first questions I'd like to ask is just the basic familiarity everybody has in the room with SSI. So I'm going to have this up for about 10 seconds, and you know, if you don't want to answer it, that's perfectly fine. But it's going to help me gauge where you guys are in terms of your understanding of either our sentiment index or quite simply just using sentiment in your trading. And I'll go ahead and close this in just a moment. Excellent to see. It's excellent to see that about 2/3 of you guys are not familiar with SSI. So I think this is going to be an incredibly valuable session, given that it's a free indicator, given that it's, you know, basically like I've mentioned for probably close to 9-10 years. You know, this is something that we've been working with as a tool in the. It's something that we've had just a lot of experience with, seen it through a lot of markets, seen the value. I'm going to provide a case study on dollar CAD, which to me is an excellent example of how this can really kind of align with what the market is doing right now in a way that other indicators have a hard time seeing. Mel says it would be useful if you can let us know which live charts you're going to be looking at so we can have them open. You know what, that's an excellent point. And let me do this actually. So I'm going to post in the chat to all the link up front to the indicator. And the reason why I want to do that is not only so if you guys want, you can get started downloading it now. You know, I understand the desire to kind of play with it as you're hearing about it. So this link that I just sent out, so thank you, Mel. Let me say that first. On this page here, when you very first open up that link, which gives you the indicator for free, you can see there's a button that's going to say free add to cart, which I'll explain this in more detail later. But there's going to be, in fact, let me just do this. This is the page here, and so these are the markets that I'll be looking at. And so this is just a quick snapshot of that link that I sent you guys. And so these are some of the markets. So I'll tell you, the main one I'll be focusing on today, actually spending time with Mel, is going to be dollar CAD. And I'll explain why in just a moment. But we're going to be looking at a few other ones. I'm not going to be doing analysis on all of these, but by all means, in terms of the one that I'll be spending probably the most time on individually is going to be dollar CAD. You'll see why in just a moment. But we'll take a look at the others as well. I have the indicator loaded up on all of these charts. I hope that helps, Mel. An excellent question. Andy, I do not have an answer as to when this will be available on MT4. Our focus for the current time is making sure that you have a ability to, or making sure that we have it working on Marketscope 2.0 before it goes to other platforms. Olawol asks about U.S. oil, and Olawol, we will be looking at it on U.S. oil as well. So any of these tabs up here, if you see it on the chart, it's an indicator quite simply that has it there. So this is what it's going to look like, and again, we'll explain this in a bit more detail later. So about 2/3 of you, actually a little bit more, said that you're not familiar with SSI, which let me tell you, it is my pleasure to introduce this indicator to you, as well as answer questions that you have as we get up and running. What I would note here is quite simply, there's, I would say on the surface, a bit of a disconnect of what this indicator shows you and how this provides information to you as a trader. And let me explain that. The idea here is basically to see what your peers are trading, right? And the sample set that we're taking is the sample of FXCM's retail trading crowd. That's from a retail FX standpoint. That's a significant sample in terms of retail FX trading. What I would warn you about up front is to think that because the majority of traders are showing a bias towards one side of the trade, and again, there's some terminology that you're going to have to get comfortable with here, but basically we're looking at what side of the market is the retail crowd favoring. What I would note, again, up front, and I think it could save you a lot of frustration hearing this up front, is that the retail sample size of FXCM is very small relative to the $5.5 trillion per day in the FX market. So while we are seeing what the peers are trading, so to speak, that doesn't mean that's what we should follow. In fact, we're going to be looking at this as a contrarian indicator. Contrarian meaning basically looking at what direction the crowd is biased towards and looking for price action movements opposite of that. So again, sentiment is a contrarian indicator, and that's something I'll hit on multiple times through this. The question that I often ask, and you can see that here, is do others think the trend is worth joining or worth fighting? One of the, I would say, kind of fascinating behavioral economics, if you will, of SSI and of sentiment indicators in total. We're going to take a look at some other sentiment indicators as well, just to get a better sense for how this works, is that retail traders, often it's because they're trying to get as much of the market, as much out of the market as soon as they can, are often fighting trends. And basically, and I think this is a bit of a, whether it's recency bias or kind of this myopic view of they're trying to catch a turn in the market. And so this has been my experience talking to thousands of traders over the years, and seeing what people are doing and what they're saying to themselves as they get into the trade. They are often looking at basically saying, okay, this thing is moving down so aggressively, right? And so, you know, let's go to a live chart. Let's take a look at dollar yen. Great example. So you can see there that since November, there has been a bullish bias by the retail crowd, right? This, again, contrarian indicator. So the retail crowd has a bullish bias. This basically means they think this trend is worth fighting. That's not our preferred view. And what I have here, very simple 21-day moving average. So nothing advanced here, nothing sophisticated. It simply is showing us, you know, how is price relative to a moving average, and what does that look like relative to the ratio down here. And so what you can see here, in fact, let me just pull this up. I don't know if you guys can see this. This is 3.68. And then a few other digits. What that means is that for every one trader that is short or selling dollar yen, there are 3.68 traders who are buying or who are long, right? As you can see, that one trader is laughing all the way to the bank, basically, as these 3.68 traders have been increasingly frustrated by the strength of the yen. And this is quite simply, I think, a good example, and we're going to take a look at other examples too. Deepak says, yeah, the retail is the wrong crowd to be looking at because the retail guys get slaughtered by the institutes. It's funny you say that, because that's exactly the concept here, Deepak, is that we're going opposite of the retail crowd. As a contrarian sentiment index, we are basically saying, okay, there are 3.5 traders looking higher, let's look lower. And so I'm glad you mentioned that, Deepak. It's an excellent comment. And I would say, because of that short-sightedness by the sample set that we've had here over the years, again, they are often looking for the turn. And so, you know, in doing so, basically there's this view that, you know, okay, this thing's moved down so far, if I can buy now, I'll catch that turn. That's going to be the move to catch. Does not basically allow us to see trend continuation. George has a good question here. It says, does the number 3.68 only look at the number of trader positions or also the volume size? Great question, George. Thank you for asking. The thing that I would note, so this is ratio analysis, and it's, to me it's one of the most descriptive, right? Because you have, you know, in terms of categorization, you have nominal, which is basically just naming something, which doesn't really give you much information at all. Ordinal, which puts things in orders, so that's like a strong, weak index. Integer, and then ratio, and with ratio, it's basically giving you a relative positioning. And what this is doing is, this is saying whether somebody has $1 million in their account or $100,000 in their account, 10,000, 1,000, whatever. One trade, regardless of the trade size, is one view, and so, or is one position per account number. So hopefully that helps. It's a great question there, George. So when we're looking at 3.68, it means from the FXCM retail trading position, there are 3.68 traders who are long, you know, or excuse me, dollar yen 3.68 who are long for every one that is short, and it doesn't take into consideration volume and size because again, this is pure sentiment. Whether somebody has $1 million in their account or $10,000 in their account, if they are long dollar yen, that's the sentiment that we're looking for. So excellent questions there, guys. And again, it's a very good point brought up earlier by Robert. Robert says, you know, I'd like to see this inverted. That is part of the, for lack of a better word, the skill set of reading this, and something that I hope is gathered through today's session, which is quite simply that, you know, we're coming at this saying we use SSI as a contrarian indicator to price action. So the fact that a majority of traders are long dollar yen gives us a signal that dollar yen will continue short in the sample. So I hope that helps. All right, let's take a look here at a historically more famous sentiment tool. It goes beyond retail Forex, and that is the Commitment of Traders report. So the Commitment of Traders report, and Jamie Setley writes an excellent article once a week that breaks this down. I'm a big fan of the article. I look at it all the time, and it looks at basically the relative positioning of commercials, right? So that's your Coca-Cola, your Kimberly-Clark, your Home Depot, these international, Toyota, these international companies doing massive hedging. Your non-commercials, which are basically hedge funds, institutional speculators, and then you've got kind of the mom and pop retail futures crowd. This has been a famous sentiment tool. There's a derivative of the COT called the Daily Sentiment Index, and basically they're all looking at the same thing. They're coming from this as a, where are their sentiment extremes? We're getting more and more people coming in here. So I'm going to throw up another quick poll here, if that's all right with you guys, as we get more and more people coming in. And this question, quite simply, is just going to ask, what would you guys like to learn today? And as we're going through today's session, you know, definitely it's something that we want to keep answering. But not going to spend so much time here, guys, on the COT and some of these others, but just to know that there is a history of very valued sentiment trading tools out there. And basically they're all coming at the view of, when is there a sentiment extreme? Where is there basically an overloading of one side of the market on a position? And obviously you guys are in London. It's around 11:20 there now. I'm in Dallas, so it's a bit earlier in the day for me in the United States. But what I would note is that, you know, quite simply, there's about 25 billion pounds short sterling right now. And if you look at sentiment from the COT perspective, a 52-week percentile, you have a incredibly bearish, on a relative basis, the most bearish extreme on sterling. And so if we get that unwind, and we'll take a look at SSI on cable as well, you get that unwind that has the ability, quite simply, to bring about what I would call a massive unwind on cable. And we'll take a look at that in just a moment as well. But all that to say, when looking at these, that's the big idea, right? The big idea here, and some, you know, I've heard it called the white magic of trading using sentiment, because it's basically this clear way of saying that there is this crowd on one side of the trade, and if they have to unwind, you know, it's that concept of yelling fire in a crowded theater, right? It's this rush to get out of the trade or to flip that position. Our head trading instructor Jeremy Wagner has used the example of, you know, basically everybody being on one side of the boat, and then they all fall out and the boat flips very aggressively. It could be that same idea there. And so while it's intention, well, I should say there is an instinct of traders to want to fight the trend, we're looking at trend continuation here. And that's what the SSI is going to allow us to see. Okay, there are more and more traders fighting this trend, but again, it's a very small sample of the entire population of FX. And at the same time, we're going to have a bias for trend continuation. Oh, excellent, Deepak, and thank you for these comments for everybody here. But Deepak says, I think it'd be an excellent idea to utilize sentiment alongside volume before placing your bet. And I think that looking at some type of confirmation tool, whether it's technical indicator, whether it's volume, can be excellent as well. I would agree with that as well. If you get basically a volume breakout as traders are fighting the trend, volume breakout is a trend confirmation. And you could also say from a sentiment perspective, when you have when you have retail fighting a trend in which there is a volume breakout in the direction of the trend, that's an excellent view. So thank you very much, Deepak. Chris says, at what point does the SSI score measure its reading? If I move to a different part of a 15-minute chart, the score remains the same. Yeah, so it's going to be updating in real time. And what I have on the charts is is basically a daily chart by nature. Also, just for what it's worth, you can display this in a few ways, and again, we'll get into a little bit more detail on how to add this to your chart in just a moment. You can either look at the ratio, so there are 3.659 traders long dollar yen for every one that is short. Again, we favor the downside continuing, and you can see here this is just another way of looking at this. It's basically saying there's 78.5% of traders long dollar yen. So this is just a good sample set here to show you SSI in action, right? Which is basically showing traders continue to fight this dollar yen trend, i.e. buying it as dollar yen continues to push lower. But in terms of the question, Chris, the ratio is the ratio, which means whether you're looking at a 1-minute chart, a 5-minute chart, an hourly chart, or a daily chart, that ratio of FXCM traders that are long dollar yen versus the one that's short, on a ratio basis, that's going to stay the same. Though it does update in real time, so you're going to see more movement if you're on a 1-hour chart than if you're on a daily chart in terms of something like this percentage long. I hope that helps, and great question. All right, so the idea here that again I'd want to drive home before we get a little bit more into how to use this is that we are looking at a sample, and the sample that we are looking at as retail traders, as Deepak noted earlier. And we've historically, again, this indicator has been around close to 10 years. This is something, or it might be a little bit more than that. Again, I came into the fold of FXCM about 8.5 years ago, so it's I know we've been using it since then. This actual indicator being available on your charts, that's why we're doing the webinar, because that's just become available, and why we're excited to share this with you. And something we've been using internally for a few months as it became available internally, and again, very happy to show it to you guys. But over the years, we've seen a very common trait of retail traders. The sample that we're looking at here, again, loves to fight the trend, loves to see if they can catch the turn. The problem is that the turns are rare, right? The turns typically happen when you have this confluence of events that shift the market. I mean, it's kind of like a major storm, whether you think of a hurricane or a tornado, something of that nature. A lot of things have to happen in order for that event to occur in the first place. If it does, it can be significant, right? And that's where that recency bias comes in. People think about, oh man, remember in January we got that significant move, or remember in July 2014 when euro dollar topped, or August 24th of last year when euro dollar went to 117 and then went down to 105 in December. They think about those, but they don't think, in my experience, they often do not think about the time in the middle where we were getting to those extremes before we turned. All right, so that's the thing that I think is very helpful to hold on to, is that the sample that we're looking at here continually tries to fight the trend. This was a question we got earlier, so I don't think we need to spend as much time on this slide, but you can see here that what we're looking at is we're looking at basically one trader equals one vote in this ratio scale. So regardless of the trade size, we're basically coming in and saying, okay, I don't care if this trader has $1 million in their account or they have $10,000 in their account. If they are long dollar yen, regardless of the trade size, that's one vote, and then we tally those ratios together naturally algorithmically, so it's real time. And we have a large amount, as you can see there, of historical data that's available, which, in my opinion, pretty fun to do. Is as you're testing out a new trading system, you can go back basically with SSI now on your chart, something we haven't had the ability to do, and see how this works as a filter into your trades. All right. let's talk a little bit more about this and why I think that adding this to your chart can be so helpful. One of the key things, and looking at what people were understandably interested in, I was using SSI as a confirmation tool. Obviously, people also want to know, how do others trade with SSI, and I'll explain how I trade with it and how I've seen others trade with it as well. I'll also share with you the strategy from from an internal system that trades SSI. But to answer some of these questions, I think it's helpful to know that, quite simply, the thing that we're looking at here is not necessarily price extremes, but we are looking at sentiment extremes. And what I mean by that is that, again, when this sample continues to fight a very strong trend, they are not in and of themselves able to move the market. And so what's helpful to know, and what I like to think about, is when you look at this, we get these extremes, but that reversing of that price, again, is rare, something we've already talked about, but we typically see traders continue and continue and continue to fight these trends. While mean reversion does often come, what's incredibly helpful, and this is, in fact, I'll be spending a little bit more time on dollar CAD a little bit later, but this is, to me, one of the great kind of samples of SSI, and you're going to see it marked up on a slide that I'll have here in just a moment. But this is a good sample of how we've seen the retail traders fight the trend, and begin to basically fight it more aggressively as it progresses. So I'm going to word that again. Retail traders tend to fight the trend more aggressively as the trend extends. And so you can see here these short ratios. And what's interesting is you can see here, by the time they often flip that trade, flip their overall bias, then you often have a price switch. And so earlier I mentioned how others trade with SSI. And those flips are often one of the key things that are looked at, as well as changes in relative SSI positioning. Now that's where that percent long really comes in handy, that other way of viewing this. Let's let that load here. So basically, when you see these aggressive moves, right, so these aggressive moves down, right, or even these aggressive moves up, so that's what's helpful about this, and something, again, that historically has not been available, is that typically you just saw the ratio, and that was helpful, but at the same time you didn't know if we were more bearish yesterday than we were today. And so you can see there, basically, when we're at this peak here, we're basically topping out on this price. And then as we got much less bearish, people basically came in and said, well, wait, that was a strong trend, let me buy it, it should continue. And then you can see here the net long bias basically develops as we come down into a bottom of price. And then as price starts to break out again, it's like they're frustrated with it, and then they start fighting it again. So Nippon says it's basically buyers become sellers and sellers become buyers. It is that on a massive scale. And so when you look at it on that, standpoint, what's interesting is when buyers become sellers and when sellers become buyers on a larger size. And what we typically see, and that's why I kind of call it the white magic here, what we typically see is that the FXCM retail crowd, as a sample set of the entire FX market, typically buyers become sellers when the market breaks out, and sellers become buyers when the market breaks down, and they buy more as the market breaks down more. And so, again, to borrow Deepak's wording here, one of the members in the room, you basically have this environment where they continually, for lack of a better phrase, go to the slaughter. They continue to fight these very, very strong trends in hope of catching the turn. All right, so with that, I would note here, guys, that this is a long overused quote, but I think it's valid here. and it's from John Maynard Keynes back in the Great Depression, which says, the markets can stay irrational longer than you can stay solvent. That's probably for lack of a better phrase, the rallying cry of these traders that are fighting these strong trends. So regardless of the market we look at, one, as you can imagine, that's catching my attention now is gold. Gold, you're starting to see the retail side load up short on as that price breaks out higher. Guys, just a quick question. We have a comment here from Kevin who notes no charts and no sound. Could I get just another quick audio visual check? All right. Some others are saying it's good. If anybody's having issues, I'm just going to type this into the chat. Encourage a refresh. All right. So just wanted to throw that out there. Thank you guys very, very much. Paul said it should have been called the Idiots Index. Wouldn't have been good for marketing. we'll leave it at that. But I do think it's good. Again, you know, the wording that's basically stamped in my mind is that we use SSI as a contrarian indicator to price action. The fact that the majority are short, like in this example with gold here, as price is breaking out, gives us that view, basically a bullish bias, but gives us that view that gold may continue higher. And as you can imagine, let's go to some of the sterling crosses here. So cable, you can see traders have been buying cable rather aggressively into this historic event, as you guys all very well know. In fact, there was an article on Bloomberg I was reading. I think it was just yesterday, or maybe it was Monday, but it was saying that the largest retail position in Tokyo is long pound yen. Right, that's a no thank you trade. That's you know, I wouldn't trade that with your money. I wouldn't buy pound yen with your money, let alone mine. So you can see here quite simply that we're seeing a similar development. Basically, we continue to have retail buying pound yen into this aggressive, volatile event, and so what to me is worth watching. Let's go back to cable. Is depending on the outcome of the vote, quite simply, if in fact we start to get a breakout and the retail crowd starts selling, right? That'd be a perfect example of utilizing this type of indicator. Basically, whether you use moving averages or Ichimoku, like I'm a fan of, or whatever you use, you get a breakout, or pivots, you get a breakout to the upside, depending on the outcome, and then you start to see the retail crowd in cable go short per SSI on your charts. That would be the type of indication that cable could continue higher, and that would be the signal we'd be looking at here. But you can see here the percent long has basically oscillated between 75% and around the mid 50%. So we continue to have, you know, throughout this downtrend, basically from mid-year last year, we've had this bullish bias from the retail crowd in cable as cable has continued pushing lower. Let's go to another chart. So here's Euro USD. This is the pair that people love to hate if it's rising, and hate to love if it's falling. And with that, you can see here that we're basically sitting on this rather interesting channel here right now. But I believe if we get a breakdown in the dollar, basically pushing euro dollar higher, and we get the retail crowd continuing to favor downside, which it's not that aggressive now, and that's, I'll tell you, this is a scenario where I like this percent long, because it shows it a little bit cleaner. To me, it visualizes it better, I guess is a better way to word it. It visualizes it better when you have not a very strong bias. You can see here, let me just take this example. Right, so that incredible move August 24th, we saw Euro USD. There we are. I'm going to just mark this here. So we saw Euro USD basically go from 108 to 117 in a couple of weeks, and you can see here the retail crowd got more and more aggressively short. And so with that, I think it's helpful to see these, because, and this is another way to view it. I'm going to pull up this. Show you this. It's just another way of visualizing it. Basically shows it on top of, it's just an internal image or visualization here. But you can see here when you have SSI, which is what is shown in the red bars, just like you see on your chart there. Just going to try and outline it, make it a little bit easier to see. So you could see over price, we tend to get the retail crowd fighting these extremes. And that's, again, why I share that quote with you. The market can stay irrational longer than you can stay solvent, because to me it makes that claim pretty cleanly that it's not worth fighting these very, very strong trends. So with that, I would say that, you consider the characteristics of the sample group. It's basically made up of traders who fight the trend unsuccessfully. And therefore, that contrarian signal, less colorful than how Paul worded it, but could be a valuable signal. If the majority of traders are losing, and I can see the opposite side of that trade, which is kind of what SSI is showing you, that's a pretty good signal. And within that, you can see here, dollar CAD. Well, let me just go ahead and bring up this chart. While we do not know what tomorrow will bring, it's helpful to see scenarios like this. So good question here. Jency says, so how do you use SSI to enter and exit a position? So my two go-to indicators, right? I mean, it's while I have a daughter, they're like my kids in terms of trading. It's Ichimoku and Elliott Wave. And so with that, what I'm basically looking for is an Elliott Wave breakout or breakdown in a bear trend, or an Ichimoku breakout or breakdown. When I get that, though, I'm looking at SSI, specifically a bullish-bearish ratio of basically positive 1.5 or greater, or negative 1.5 or lower. And so if I see a breakout per my preferred technical indicators, again, Elliott Wave and Ichimoku, and then I see that against my breakout is the preference of retail traders, that's great to me. And in fact, let me look at, I'm going to pull back up dollar yen, if you don't mind, even though we're doing a dollar CAD study, just to show you longer term chart here. All right, and so you can see here, this is an example. If you're not comfortable with Ichimoku, don't worry about it. I've got plenty of articles on Ichimoku. I'm happy to share with you some recorded webinars on Ichimoku. But the main thing I would share with you is this. You can see here, basically, in December, dollar yen had a Ichimoku breakdown. We broke below the cloud, and momentum had also broken below the cloud. And then since then, basically, the retail crowd has continued to move higher and higher. And with that, it basically gives you again, that signal that dollar yen may continue lower. So I'm looking for those technical signals to be confirmed by basically being hated by the retail crowd. So that's what I'm looking for, Jency. I'm saying, okay, I have this signal. It's telling me to sell. What does the retail crowd think of this signal? They hate it. Okay, great. I'm selling. And so that's kind of what I'm looking at here. And so I hope that helps answer. I hope that helps answer the question. Excuse me. Going to dollar CAD, and this is that chart that I had up a little bit earlier. You can see here the retail crowd, as per SSI. There's a few little flips there. And in fact, what I'm going to do is go back to the chart to show you the percent long on dollar CAD. All right, 2014. Perfect, okay. So this is where I think the percent long view is helpful relative to the absolute, because quite simply, you can see here, see this time we came up barely above, basically break even. On the chart there, that shows a green bar, but basically we broke even. All that being said, looking at it from the percent long can be a bit more helpful. But you can see here with SSI, now there's obviously a lot of macro factors. You had a dollar breakout, a US dollar breakout. You had an oil breakdown. And so with that, Jitsi says, that's cool, thank you, absolutely. And Samuel, if you want those Ichimoku lessons, please, buddy, just shoot me an email, TL@DailyFX, and I'll have my contact information hopefully at the end of this. But you can see here with dollar CAD, basically July 2014 to April of 2015, the retail crowd hated dollar CAD. They hated it, and it rose 1,700 pips, right? And then it broke down, and they loved dollar CAD as it was breaking down, and it started rising again. And man, did they hate dollar CAD? They hated dollar CAD, and it rose for 1,300 pips. And so you can see these patterns, and these patterns consistently develop. Excellent question here. Alexander asks, what charts can we use it on? Whichever ones you want, my friend. The ratio is not going to change if you're on a daily chart or if you're on a 15-minute chart. The ratio is going to show you the same, but basically what we'll see here is that when we get this type of view, and again, this is where I think that percent long is helpful, because you can see it here, that as this was moving higher, as dollar CAD was moving higher, you basically had this view where they were falling out of love with dollar CAD as it's moving higher, right? And then it breaks down, and now there is a net bearish bias, and we're basically at multi-week highs. And so with that, hopefully that's helpful for you to see on these like 15-minute charts, Alexander, how it can be helpful to see a breakout as the retail sample is falling out of love with the currency, or basically breaking down. Let's do that dollar yen one again. I've been asked that question, Warwick, for probably the last 8 years. He says, but if everybody knows about this indicator, it's a great question. And I've wondered the same thing. And I'll share with you my answer, and feel free to poke holes at it or ask questions about it. Sorry, before I get to that, Alexander, so hopefully this is just 15-minute chart of dollar yen. So you can see those traders, really from 106 down to this morning's low of around 103.50, continue to buy into it to their own demise. Warwick says, okay, you're now giving this indicator to the retail crowd. You say most of them start trading as you suggest against the retail crowd. Is it not going to become less and less effective? I have not found that to be the case. I will tell you that probably only a few percentage points, if even that high, of basically the people that have access to SSI use SSI. Again, the idea here is that, or at least what I have seen, Warwick, is that over the years that there continues to be new traders coming into the market that are looking to catch the turn. Again, as we've noted in today's session, it's a pretty dangerous approach. And so while in theory, if everybody who was a sample of SSI started using SSI, yes, it would become less effective. It's not something that I have seen. But we've had this 8 to 10 years, and it's been available, not on the charts like it is now, but they do not, we continue to have a very, very small percentage. Again, I would say probably less than 1 to 2%. That have access to it, that use it. And so in that example, given, we have, basically nearly 200,000 accounts that this sample size is based off of, while there's only probably about 70,000 traders that are actively trading the market, might be a little bit more now from the times I got that number. But again, this is something that we do not see basically people using, which is unfortunate. WEFO says you can't change human nature even with the SSI indicator, and I think that's excellently put. Guys, I'm just going to drop my email address. Some of you have asked for it. It's going to be just tl@dailyfx.com, so you can see there. All right, so with that, hopefully this vision of SSI against dollar CAD is helpful. Reason why I hope it's helpful is because this is something that I saw in real time, basically this significant rise as the retail crowd hated it, and then the significant fall. Basically we're about 2,000 pips now from that high, and the retail crowd loved it as it was falling. Again, trying to catch the turn, just what WEFO said, right? We just can't change human nature, even with a great indicator. And so that being said, I hope that's helpful. What I think this could mean to your trading specifically is naturally to, again, provide additional information on those breakouts that you said. So we had that great question earlier from Jincy, and Jincy was saying, okay, so how do you use this? Basically, it's additional information when you see breakouts, when you see a great trend. the thing that naturally, the counter to that is basically if you're sitting here and you're saying, okay, this looks like a good buy. This looks pretty low right now. I think I can buy this on the cheap and I could get a good bounce. And then you look at SSI and the ratio is like 3.5, like we see with dollar yen, you know, you should have pause there. You should say, okay, gosh, I'm not the only one in this view, right? And gosh, those 3.5 are getting slaughtered. You know, maybe I'll wait till it goes from 3.5 to 1.5. You know, you see a sharp decline. And again, that's where I think that those percent long ratios can be very helpful, right? Maybe I'll wait till it gets to 50%, so we start to drop off. And then if it goes negative, you know, and my technical system continues to validate that, maybe I'll buy more. And so in terms of what this could mean to your trading, that's what I'd look at. I think the relative ratio is helpful to see what's happening now. Again, right now, I think that percent long is better for basically a little bit, you know, seeing trends and seeing how the markets are adjusting to it. So you can see there, of course, available on 17 symbols. We talked about that a little bit earlier. And basically, I think it could be another form of divergence as well. And when I say that again, if you see that we're moving higher and higher, and then all of a sudden, you know, basically you're seeing traders selling it more and more, that to me is basically, I say negative divergence, but it's basically looking for a, you know, slingshot higher potential. So here are, based on what Jincy was asking earlier, these are, I think, different ways to use it. In the next few slides, guys, you're going to be talking about adding it from that link that I shared with you, which is in the chat section. But basically, finding it, downloading it, and applying it to your charts. Just a couple of steps. But one of the things that we've historically used, either -2 or -1.5 or lower, is a nice buy filter if you want to use SSI in addition to your trading system. If you're looking for a breakdown or selling, and you see that there are roughly 1.5 or 2 times as many buyers as sellers, that's the idea that we're looking for there. And that's why I say it's a breakout filter. That's how I use it with Ichimoku. That's how I use it with Elliott Wave. Again, I get that breakout to the upside, and I look at SSI and I see, okay, there are 2 or 3 times as many traders selling as buying. That means they basically hate the signal, but given the sample of SSI, I'm okay with that. And again, I think that cause for pause that SSI can provide is excellent. In other words, you see something, you think, man, this thing's really high right now. You know, this thing's probably topping out. It might move lower. Maybe I should sell this right now. And then you look at SSI, and SSI is at -3. You're not the only one that's thinking that, and the ones that are thinking that actually have money on the line, they're not faring so well. So it's better to basically let them sacrifice their money for a better view for your own trading. All right, you can see there, I said this, you know, basically it helps avoid bad greed, which is thinking you know more than you really do. All right, so what are the steps of adding this on? So earlier I shared the link with you guys on how to add this, and in fact, let me just go ahead and repost that link in case some of you joined a little bit late. Either way, we're just thrilled to have you guys. So hopefully you can just type that in or click that link in the chat box and follow through these steps. So you can see there, add to cart. If you are an FXCM live client, you can just basically punch in your account number and password, and that'll be fine. If you're not, you're still going to have the FXCM Trading Station 2 or Marketscope 2.0 charting in order to put this onto your charts. But you can see here, free download. Once you've downloaded it, basically you add to the cart. The cost will be 0.00. Complete the purchase for $0. You don't have to put in a card or anything. There are some apps that are for purchase, and that's why it's this format, in case you're wondering. But what you'll note is that basically you'll get the file and then you'll download the file. Yes, sorry, we've had a few questions as to whether or not this is a recorded webinar. Absolutely is. Will be made available for rewatch. And then also James Stanley will be doing a webinar tonight for you guys. I think it's around 2 p.m. Eastern time. But so if you want to catch another live session or get another person's take on it, James Stanley will be providing a webinar tonight. But this will also be recorded. So here's just a quick screenshot here. And what you can see is basically this this SSI here. What you could do when you go to the charts, let me just show you a quick kind of live walkthrough. You go to add indicator. This is what it's going to look like in real time, but you can go to import. find your custom indicator, your custom indicator folder, open it, and then that's going to be you just put there, install the indicator. And it's going to say you already have that indicator, but if you don't, that's the very simple process, and then you'll be able to find it in your indicator list. Another thing you can do if you want, if you don't want to click the import, you can drag that file straight onto your chart. All right, and again, one thing that I would encourage you guys to do as you get comfortable using this on Trading Station 2, which right now for the questions that we've got, it's while development is working on it, and this is what they're focusing on, just how it's received on Trading Station 2. It's not available on MT4, and quite simply, if you have a Mac and you're using whether it's web-based, then a parallel for the software, a Mac parallel or a Windows parallel to download the software is what would be needed, because this has to be applied. Basically, this code of this indicator has to be applied on the FXCM Trading Station 2 platform, and is not available on the other platforms right now. But you can see here, guys, I would absolutely encourage you, set up another practice account if you want. Get comfortable with it. I feel like learning comes from using, especially with this, because it basically is retraining your trading eyes. And what I mean by that is that there's I think kind of this human nature to come in and say, okay, the majority of the crowd is this way, and the crowd is a bit semantics, but it's the wrong word. But your mind says, okay, the majority of the trading crowd, the retail trading crowd at FXCM is going this way. Maybe I should be that way as well. And it's not that case. This is, again, looked at as a contrarian indicator. And I'm going to run through a few of these markets before we close out. But definitely get comfortable with it on practice account. Get comfortable applying your current trading strategy or whatever trading strategy you're looking at, and then utilizing that SSI as a filter. So this is again, if you remember, basically these rules, again, you can be a bit more aggressive if you want. Oops. If you're looking to buy, look for basically a negative 1.5 or lower. If you're looking to sell, look for positive 1.5 or higher. But that's something that you can do as you're getting comfortable with it. All right, you can see here. This is just in closing, and in fact, we're also going to be going to the charts here in just a moment, basically to close this out. But what I would note is that if you're looking for something to add to your trading system that basically isn't technical, isn't fundamental, this is a great thing to add. Obviously, we like to jokingly call, and I think this is Hat Tip Walker England, but call them fundamentals, right? Because you never know what they're going to provide in terms of price action. The technicals are great, but at the same time, a lot of traders are looking for something else to add. This is, in my opinion, something very valuable, at the same time, something free to add to your trading system to basically be a filter for your entries. And again, hopefully you guys got that link there. Warwick, I would say, and the question that we often get, I'm going to go to the chart here, is the time frame is basically not relevant as to if this is an effective strategy or not. I would say if you're going on those smaller time frames, absolutely use the percentage long option. The reason why is because if you could see the retail trader is building up long positions as we're breaking down, that can be basically a symptom that a breakdown is about to develop. So a lot of the questions we've been getting, which are very good questions, are, can we use this on a shorter term chart? And you can see here, so this is, look, we're basically at 130 on dollar CAD. We've moved from about 126.50 on June 10th, last Friday, 126.50 to about 130, right? So 350 pips higher. And as we've done that, and this is a 15-minute chart, as we have done that, the retail crowd has gotten more and more and more bearish. And so I think that's helpful to see even on that shorter term. Now, again, Warwick, to your question earlier, I think that, you know, it wouldn't be as valuable to see just the flat ratio. It's not as easily seen there, in my opinion. You might have better eyes than I do, which isn't saying much, but you might have better eyes than I do. But to me, this is easier to conceptualize that, okay, the retail trade is fighting this crowd. Yes, Demetrius, that's correct. The retail trade is, the retail trader in aggregate is fighting this position as it's moving higher. Given the track record of the retail trader, I think I'll go the opposite way. Thank you very much. This is just another visualization of dollar CAD. Right, so you can see that here. So definitely worth keeping an eye on in case we're about to get a breakout. It's worth keeping an eye on to see if retail sentiment really starts to break down, i.e. they get more bearish as this thing moves higher and higher. You know what? That's a good question. Let's give it a shot. Yes, you can put a moving average on SSI if you wish to. Never something I tried before, but a question from Neil came in. Can you put the moving average on the indicator itself? Yeah, you just have to right-click in the section where it's on your chart, right-click Add Indicator, and then go to town, my friend. All right, so a couple of you have asked for the link to the recording. If you signed up for this, you'll get an email with the link to the recording. It'll probably be in about 24 hours, so we have to basically load it up and everything else. But I would just quite simply note that if you guys have questions in the meantime, you're absolutely welcome to reach out to me. You can see I have my Twitter handle up there. In the chat section, I put my email address. Samuel, I just threw on the, I think it was the 100 period moving average. Double check that real quick. Yeah, 100 period moving average. So again, as a filter, I think it's excellent, especially when volatility is so high and prices move so aggressively, like we've seen with cable. It's easy to say, man, this thing is so low that basically, if this thing bounces even a little bit, I'd be in a pretty spot if I was able to catch that bounce. The problem is, A, you're not the only one with that thought. B, that thought's not often very productive. And C, I think you look at this environment here. Let's go ahead and close with cable. As great as this dollar CAD chart is, let's close with cable, given the event that's upon us. Right now, you have about 25 billion pounds, maybe a little bit more, since this reading over the weekend. That is basically pushing down cable into the vote. You've got 25 billion pounds in options that is basically going to profit if cable touches or breaks below 135.6, which is the 2009 low. And so you could see here the retail crowd. They don't care, and maybe they should, but they don't care. And they continue to buy this. And so, again, what I would keep an eye on, and what I will close this webinar saying, is that as you get comfortable with this free indicator, one of the great things to look for is whether you have a significant event, like suppose we get a remain vote and cable breaks higher, and then the retail crowd starts selling, and then they start selling more, and they start selling more, and cable moves higher, and cable moves a little bit higher. That, to me, is quite simply a very helpful signal to say, okay, this thing probably has some legs to the upside. Not only do we know there's basically 25 billion pounds plus in the options market and other markets as well that has to unwind that short trade, but the retail crowd is selling it now. So given that unwind, given the, my desire to use this as a contrarian indicator to what the retail crowd is preferencing, I'm gonna favor that. So, guys, I hope this has been a helpful session. I'm gonna close with one last poll, which is basically asking, do you understand this indicator now better? If you do not understand SSI better, it's not your fault, it's mine. Feel free to shoot me a question. Again, TL@DailyFX is my email address. You can see there. well, let me go ahead and close the poll so you can see it. All right, so you can see there is my Twitter handle. So feel free to reach out to me on Twitter. Feel free to shoot me an email, tl@DailyFX. But I hope this has been a helpful session. I know it's lunchtime there in London, so I hope you guys can go grab that before it's too late. But thank you guys very, very much for your time. I thought this was a wonderful crowd, excellent questions. And by all means, we hope you enjoy this free indicator. Use it on the chart of your choice. Again, I would say the shorter time frame chart you use, probably the more valuable that percentage long setting is on the indicator. Have a great day all, and we will see you soon. Thank you for your time.